Hey everyone, it's time for the latest Kenny's clip for the end of 2025 on real estate and the various investing markets. So, real estate first, we are continuing to see a very, very slow transactional industry with prices dropping in over 50% of the country. Although the statistics don't show the size of the drops, there's markets where price drops 10, 20, 30% house over house. When you look at median house price, that makes it look like prices are not dropping. So the press isn't going to catch it very well. But prices are continuing to drop in 50 to 60% of the country. And I expect that probably to spread. The last to start showing drops will likely be the Northeast and the Midwest, as the affordability in the Midwest is keeping it a strong market, and availability of properties in the Northeast is keeping prices stronger. But out here in the West in Denver, we see prices really softening, and just home buyer demand is just really low. So, what's going to change anything? I don't see any major changes coming up for next year, other than a continuing price softness. People are pulling houses off the market at record rates. Builders are giving record discounts for their properties in order to get their sales to go through. So they're trying to unload land that they've started developing and such. So they're in the process of cutting prices. I think Lennar had cut prices net of about 27% with all incentives. Hard to make a lot of money doing that, but they are moving lots and keeping things that they've already committed to moving forward. So lots of that going to continue. I don't see a major improvement in the real estate market next year. I think the Federal Reserve will continue to cut rates as the economy shows that inflation is ebbing. But the problem is that it's just not going to push the mortgage rate down much more, maybe another quarter or 0.5%. But not enough unless we have a huge recession, which will trigger 5% or lower mortgage rates. Will we see a big move in housing? But even then, we may, the counter to that is if the economy is that bad, people aren't going to want to move because of job insecurity and such. So anyway, moving on to job insecurity. It turns out really most all of 2024 was a really, really transitional year with only about 10,000 jobs a month added, which is well below what's needed for population growth and such. So really a tough year last year, and that's led to an even tougher year this year with jobs in the last 6 months, probably about down 20,000 a month at least, according to Jerome Powell, which shockingly has changed his tune from a month ago, saying he wasn't really thinking about cutting rates to once he sees all the jobs data and the job cut announcements and all the data really is pointing to a substantially weakening job market. And finally, Jerome, Mr. Magoo Powell, is waking up to the fact that he has to cut rates. And so he's cutting rates, but that's not helping the mortgage market a lot. We're really at a pretty decent mortgage rate when you look at long-term trends at 6%, 6.25% right now. So the cutting the rates, unless we get into a real substantial recession, is not going to make a dramatic move in interest rates. So I don't see a dramatic shift in transactions. Although I do see hopefully some improvement next year. When it comes to the economy, we have seen unemployment rise from 3.4 at its low to 4.6 recently. So the economy is slowing. I believe really everything in the economy and the American public and the lower part of the K, as you might have heard, is in recession. And the only thing that's really holding up the economy is the expenditures for AI and all the build out for that and whatnot. And so that's really keeping things going, is keeping the stock market going, and and unfortunately the stock market is becoming the economy and driving investment and construction in the commercial market. So anyway, so what's going to happen from there? I do think we're going to have a better year next year, much to some people's surprise. I think all the stimulus from the beautiful bill or one big ugly bill, whatever you want to call it, I think there is some stimulus there. It's an election year, so the Trump administration is going to do whatever they can to goose the economy, whether it's $2,000 rebate checks or a housing emergency, whatever they decide to do, they're going to try to push money out into the market. The Fed did really change their tune last week with the cutting rates. The biggest thing that's been happening, if we get into crypto, but the liquidity in the market has been drying up in the last 4 to 6 weeks. And that's why crypto's really struggled. And the stock market's kind of struggled back and forth and back and forth. Is because we've been having overnight funding where money is short in the overnight funding, where banks borrow overnight. And so that's really created stress in the markets. And the Federal Reserve has now woken up to that. They had tried to push off the fixing that stress till December 1st, and they've had to really reamp that, and now are committing to buying bonds, short-term Treasury bills, excuse me, and that will liquefy the market more and is almost a form of QE. As Michael Howell, a famous finance guy, says, it's not QE, which means not quantitative easing, because they don't want to use that term, but it really is. It is stimulating the economy. And I think that's going to really start picking up. Is the Fed start stimulating the economy as we have to finance a lot of our debt, and they're going to start rolling a bunch of money into the banks and into the economy in order to goose the economy for the election. So what's that going to do? I think it's going to keep the stock market strong. I think crypto will come back. I sold some Bitcoin about a month or two ago because I had committed to it years ago that when it hit 100,000, I was going to sell some. So I did. But I did accumulate more Bitcoin, Solana, and Ether during the downturn over the last month. So I haven't acquired more Bitcoin, but Solana and Ether I have. So anyway, I do think we might have some more struggles there for a while, but these are very long-term holdings that I plan, and so I think that that and gold and silver, the gold and silver have just been rocketing, and that's because of the financial stimulus that's likely to be coming with the debasement of the dollar, and the slowing economy tends to make gold move. And so been nibbling at that as well. And I think ultimately we should have a pretty good year as the liquidity flies into the economy, and will likely start pushing Bitcoin back up, cryptos, stocks, and ultimately, I think there's going to be some consequences that are going to be really ugly over the next year or two. Whether it happens sooner than that, I doubt it, just because of what's coming, and what I hear from many financial experts that I follow is that we're really looking into a positive market, the weakest being the crypto markets right now, because liquidity has been really tight, and that's just it's the first thing that gets shot. And there's been some liquidations from some major holders and such that have created really rapid declines in price, and then it rages back up and back down. So a lot of volatility there. My holdings are really long term. I've owned crypto for a long time, and so plan to hold it for quite a bit more, at least until we get one more last big blow off on it. So anyway, that's what I think's coming. Who knows? This is a lot of multiple forces here with the economy slowing, unemployment. Really, I mean, unemployment could take off, given that we do have hit a level. Once it starts moving, sometimes it doesn't stop, and that can be real challenging for companies start accepting the fact that, oh, we can lay off more people. And so that started late October, November. We've had the government layoffs that have now come into effect now. That started with the Doge efforts, and those started hitting in November, when they were formally laid off according to their severance and such. So that's showing up. But the leading indicators are looking decent. So hopefully we'll get some push in the economy, and some more wages going to the workers in the economy rather than just Wall Street. But as usual, I expect the Fed will dump money into the markets, and that will drive money into the rich rather than the working people. But if the Fed lets the economy run a little bit hot and lets wages increase, that would be fantastic as things go on. So anyway, if you have any questions, feel free to let me know. Have a great Christmas, New Year, and 2026. Take care.